Why are there so many people saying that the next housing crash is on its way, or that 2008 is going to repeat itself all over again when the market data does not even show it? Well, today we're going to see exactly what people are saying and really see, is the market going to crash? Let's talk. Okay, so if we're going to talk about another potential housing market crash, we got to look back at the most recent one that happened in 2008, and we got to compare it to see, is it even going to happen again? You see, the housing market back then, it crashed by nearly 30%, and the stock market followed suit by crashing about 50%. There was a lot of data recorded during this time, and according to the Motley Fool, there was about $3.4 billion in real estate wealth that was wiped out. Many companies went bankrupt, and about 7.5 million Americans lost their jobs. The unemployment rate, it doubled from 5% to 10%. During this crisis, the average American household dropped by $17 trillion in net worth. That is a loss of 26%. Anytime you lose 26% in any kind of financial investing, that is a massive loss. So millions of people, they had to end up filing for bankruptcy. They had to let some of their houses go into foreclosure. I mean, it was a huge mess, especially in some of the big, huge markets where houses were already overpriced. But what exactly led them to this point? Was there some button that was pressed? I mean, what happened? Well, very simply put, it was the bank's fault. It was the lenders who were just handing out money and doing nothing to check people's credit. They weren't verifying income. None of this was happening. All you had to do was walk into a bank, say, I made $150,000, and if your credit was good enough, they just took your word for it. I can remember talking to my parents saying they did exactly this, where they didn't lie. They did actually walk in and say exactly how much they made, but they didn't check. They didn't verify it. They didn't confirm it. It was like anyone could go in and just lie and say, I make $1 million a year to get that multi-million-dollar house. And with this, once people started not to actually be able to afford these houses because they lied on how much money they made, banks started noticing that people couldn't pay their payments anymore. And what ended up happening is all of these houses were now just being foreclosed on. People were going into bankruptcy. And all of a sudden, you got this massive influx of houses that are just sitting. And so what ended up having to happen is the government had to step in. And if you remember, President Obama at the time had to step in and bail these banks out with billions upon billions of dollars so they wouldn't lose the entire economic system of basically the world.
Our most urgent task upon taking office was to shore up the same banks that helped cause this crisis. It was not easy to do. And if there's one thing that has unified Democrats and Republicans and everybody in between, it's that we all hated the bank bailout. I hated it, you hated it. It was about as popular as a root canal.
Okay, so that was a pretty doom and gloom situation, but somehow we recovered from it thanks to the government injecting billions of dollars. So in order for that to happen, we would need the same exact scenario to happen all over again, right? But fortunately right now for you and I, banks aren't doing this. Lenders are not just going off of your word to give you a loan. If you want any kind of loan today, you're gonna have to, at a minimum, show your W-2s or tax returns to verify income. They're gonna run credit checks on you. You're gonna even sign paperwork when you go to the closing saying, hey, what I've told you is actually true and I haven't lied. They're gonna do this when you first apply for that loan, and they're gonna do this when you go to the closing. Probably about an hour or two before you close, they're gonna double check all this to make sure you're actually telling the truth. And if you just simply look at the numbers, the amount of foreclosures that are happening right now, even coming out of a pandemic, which was really, really bad, there's not even close to as many foreclosures and bankruptcies as we saw back in 2008 going into 2009 and 10. After all that happened, the house prices dropped so significantly. If you were an investor and you had some capital, they were buying up houses left and right. That's part of what caused the rental market to get so competitive and so strong at the time, because no one could buy a house anymore because they either had a bankruptcy or a foreclosure on their record. And all of these investors went and bought up all these rental properties and just started renting them out. And just a little side note, but that could be probably what's happening now, is we're starting to really see the effects of all of those investors buying up these rentals, because right now it's getting tough to buy a house. Not to say that the market is going to crash, but it still is kind of tough. All right, so if the market's not going to crash, what is it going to do? Well, a lot of experts, and I do agree with this, is that we're in what's called or ending a market correction. So what does that mean, a market correction? That sounds like it could be something complicated, but it's really not. All that happens is that if you were to look at it on a graph, prices were going up and it got to a point where it's a little bit too high, and so prices started coming back down. But because it's a correction, it doesn't mean it's going to fall and keep falling. It corrects itself. It allows the market to be more stabilized, people to build more income. And now that that has happened, and it was due to the pandemic that kind of accelerated a lot of this, now people are starting to come out of it. The home prices are starting to go back up. The rates did what they did. They went to a historic low and they started coming back up. And despite what people are going to say, the rates right now are actually normal. 5, 6, 7% is normal, people. Anything above that is abnormal. Anything below that is abnormal. Historically, the rates are always hovering around 7.5%. So if we're anything lower than that, we are doing good. But since those prices have stabilized, now the market is starting to go back up. Prices are beginning to rise. Rates are, they are what they are. And the market is not going to crash. This is not going anywhere. Real estate is by far, and it's not close, the most consistent, stable, tax-free investment you could ever make. Stock market is going to go up, it's going to go down. Sure, you can make a lot of money, but you're going to get taxed on it way more than you could get taxed on real estate. Real estate has things like depreciation that you can write off. There's expenses you can write off. There's tax codes like a 1031 tax exchange that can save you from all kinds of equity gains. There's just nothing like real estate. So if you're really thinking about getting into real estate, or you're thinking, should I continue in real estate? Should I get out? You should definitely either start it if you haven't, or stay in it if you're already in it. It is not going anywhere. I mean, think about this. People are always going to need a few basic necessities in life. We need clothing, we need food, and we need shelter. If you're in one of those three industries, your demand is always going to be there. We like to eat, we need a place to stay, and we don't want to be walking around naked. So those three things are always going to be consistent. So moving forward towards the end of 2024, it is an election year. That can play a role in what's going to happen in the market. Depending on who gets in office, and not to get political, whoever you vote for is who you vote for. But whoever gets in office, that could shape up if rates kind of go up or if they go down. Is there going to be tax things that are made different for LLCs and businesses? We don't know yet. But like I said, real estate is very consistent and it is not going anywhere. And so with real estate, there are two different mindsets, right? There's an investor mindset, which buys and sells investment properties, to rent out. And then on the other side, there's the primary home person, the person who wants to just buy their home. They're this is not an investment property, but they both produce their own set of challenges when trying to buy them, figuring out, what's a good house to buy for my primary, what's a good investment. But luckily for you, I have a video for each one. If you want to know all about investment properties, click on this video right here. And if you're looking to get your very first primary home, or you need more help buying a house, click right here.